Thank you so much, Ifeoma, for joining me on the show. Quite an interesting week we've seen so far in the market here. Just bring us up to speed on the activities that played out for this week.
Thank you, Kenneth, for having me. So in the Treasury bill space, this week saw more trading activity in the OMO space as a result of the repayment of OMO maturities on Tuesday, as well as the OMO auction yesterday, while the NTD space was very quiet. At the OMO auction, the CBN for the third consecutive time maintained stop rates at 7%, 8.5%, and 10.1% for the short, medium, and long tenor bills, respectively. And because market players were eager for this auction, subscriptions increased to 461.81 billion from 315.32 billion at the last week's auction. The CBN as well sold 180 billion compared to 169 billion sold at last week's auction. In the bond space, the market opened relatively quiet as market participants anticipated the monthly bond auction for February on Wednesday. At the auction, high bid rates prompted the CBN to sell more volumes to non-competitive bidders while raising less than 50% of what was offered on the competitive side. They sold a total of 46.90 billion to the market and 116.90 billion to government agencies. As expected, stock rates increased to 10.25 from 7.98 for the 2027 bonds to 11.25 from 8.74 for the 2035 bonds and to 11.8 from 8.95 for the 2045 bonds. And as the upward direction of bond yields become clearer, we expect investors to trade on a soft note opening next week, being largely risk-off on bonds and also cherry-picking papers with profitable yields as they see fit. And in the Treasury bill space, with the interbank liquidity remaining tight, like you said, and industry CRR debits expected by the close of today, we also expect the T-bill space to commence next week on a very dull note.
All right, now let's get into what you expect, because I'm also hearing that local banks are caught at ditching the CBN windows to get and are preferring the OMO auctions because of the yields there. Can you expatiate on that?
Well, this week compared to last week, the trading activity in secondary market has been less than expected because at the auction you can expect higher rates more than you can expect in the secondary market. So people have been very, very careful not to buy deals that would create max market losses for them. So everyone's eyes is always on the auction, whether the NCD's primary market auction or the OMO auction, just to buy there and then be careful to pick deals at the secondary market.
All right, now going into next week, I'd like to get what your expectation is for liquidity and also the currency.
Well, we expect coupon payments for the 2028 bond next week and also some Treasury bills maturity. So by midweek, we expect liquidity to improve and then some bullish sentiments will likely be seen. And as for FX, the CBN has been very on alert to be able to pay down their obligations. However, activity has been very dull in that space, and we expect that to continue in the interim.
Okay, but looking at the major economic data we've seen come out so far, talking about inflation and the GDP report, how is that filtering into the market?
Considering that market consensus expectation was for another economic decline in Q4 of 2020, the fifth return to growth in the quarter was a positive surprise, but not to the extent of creating visible market reaction. In other words, the market barely moved in reaction to the 0.11 growth in GDP in Q4 of 2020.